Hello, good morning, traders and investors. Welcome back to our morning trading recommendations channel. I'm thrilled to have you here for another insightful session. Before we delve into today's market analysis, let me remind you that the information we share here is for educational purpose only. Always remember to conduct thorough research or seek professional advice before making any financial decisions. Now, let's start with the latest updates from the commodities market. Overnight, we saw some interesting movement. The soybean oil for July fell by 0.9 to 44.66, while the soybean futures ended lower. The Dalian most active palm oil contract also experienced a dip, falling by 10 points to 7444. The decline in Malaysia palm oil futures for the fifth consecutive sessions can be attributed to expectation of rising output and slowing demand post the Eid al-Fitr festive season. Given the bearish performance of soybean oil and Dalian oil, we anticipate that FCPO could see further downside movement. Looking at the yesterday sessions, the price failed to hold above the support range at 4,000 to 4,010, which has turned into the resistance level. The market is expected to maintain in a bearish momentum within a tight range. Traders might consider selling on rebound as their primary strategy. The new support range is seen at 3975 to 70, with further support at 3950 to 3955. Okay. However, if the market reverses and trades above the 4009 level, there could be a possibility of a long positions with resistance seen at 4029 to 4030. Okay, so we will continue to monitor the markets. So for today's trading plan on FCPO markets, the short position may be considered below 4,000 with target set at 3967 to 3949 and a stop loss at 4030. Alternatively, long position may be open above 4,000, targeting 4015 to 45 with a stop loss at 3970. Okay, so that's the view on FCPO. Okay, shifting our focus to the index market, let's see what's happening there. Overnight, the Dow Jones rose by 22 points. However, the US stock experienced some volatility, swinging from red to green and back again as investors navigate through a mix of strong economy and restrictive Federal Reserve policy. Closing to home, the Bursa Malaysia's benchmark FBMKLCI index continued its upward momentum for the second consecutive day. This was fueled by an improvement in sentiment and the resurgence in bargain hunting following the recent downturn. For the futures, FKLI for April rose by 5 points to 1544.5. Given the mixed performance of US market, we anticipate the FKRI to trade within a range. From the technical standpoint, the index is poised to continue trading higher, but we must remain vigilant regarding potential tensions in the Middle East. Resistance levels are currently spotted at 1550 to 51, with further resistance at 1554 to 55 or above. Meanwhile, the support range has adjusted to 1538 to 37. Okay, so for today trading plans on FKI market, long position may be open above 1542, targeting 1550 to 56 with a stop loss at 1537. Conversely, short position may be considered below 1542, targeting 1537 to 29 with a stop loss at 1547. Okay, that's our view on FKI markets. Right, that wraps up our morning trading recommendations. And remember to stay informed and stay cautious. Most importantly, trade wisely. Until next time, and happy trading.